the morning with some of the data. Now we want to bring in our next guest. Joining us to discuss the reaction and his thoughts on the data is Alan Nuckman, Chief Market Strategist at BullseyeOptions.com. Alan, always a pleasure. Good morning to you.
Thank you.
I'll just kick it to you. What do you make of this?
Not much. I would say warm. You keep saying hot. This is a warm number. Warm. It's 0.1% higher than expectations. And we've got to remember, what are we down at? We're at 2.4. So you've got to be happy with the overall trend in CPI. And mathematically, I know people feel much different than the data says, but mathematically, CPI is significantly off its highs, obviously. And if you take the average hourly earnings, the growth in average hourly earnings, groceries are now cheaper than they were in back to the 2019 prices because of the hourly earnings growth. It doesn't feel that way, but that is the mathematical fact, and that's why we're at where we're at. We're sitting at these levels, and we're made all-time highs in the S&P again yesterday.
I appreciate that kind of take on this. Warmer versus hotter. Sometimes I just lack the vocabulary. Hey, that's my issue. But Alan, when we look at the jobless claims in addition to this, that number I think does have a little bit more sticker shock, but it comes with the asterisks of all the stuff that's going on with the natural disasters. Do you not necessarily throw that out because of that, but do you, again, kind of take it with a grain of salt knowing that the numbers are going to be skewed a little bit for the next few months?
Well, I'm an old grizzled trader. I don't ever use one number to make any determinations, especially a weekly number that has so much volatility. You know, you got to take the moving average of these to just to even think about what's happening. It's one data point, and it's a weekly data. It's weekly data that can be revised at any time. And so again, it's all about price and market action and how the market reacts. And in the big picture, we know we're getting rate cuts. 90% chance that we're getting another half a point by December. So, there's a lot of positives here. And I know you used the word recession 3 times in your last segment. And I don't even understand how that's a conversation. GDP, Atlanta Fed number I just pulled up is above 3%. So, where I come from, a recession has to have 2 consecutive quarters of negative GDP. We're not even anywhere near that. So I don't know why that comes into the conversation. You got to trade what you see, not try and anticipate a shark coming to bite us or an earthquake coming. We are in a strong everything bull market with a strong trend. Yeah, there will be profit taking, but until proven otherwise, why would we want to fight this overall momentum?
So with that in mind, then, you got S&Ps down 16. How's Alan Nuckman looking at today? What are you looking within and how to kind of navigate these days? We know that they're noisier days. There's typically a lot more volatility on a day that has a big data point, and it doesn't necessarily get fleshed out in that first 15 minutes. So what's your kind of playbook for today, Alan, for the viewers who are trying to navigate what's tough?
Well, number one, I'm a long-term trader. Like I said, I was active when I was young. That game is behind me. I use 3 to 6 month options. I buy in-the-money options that act like the stock. It's a very, very basic stock substitution strategy. So a modest move in the underlying stock produces big gains in the options. So that's the way I like to play. I call them lifestyle options. So I position myself for success. I don't worry about the minute by minute, the day by day, or even the week by week action. That's how I've found a trading style that I'm comfortable with at this point in my life to still take advantage of the opportunities. And there are amazing opportunities. The biggest opportunity is going to be in the NASDAQ. We've seen NVIDIA come back. NVIDIA and Google, if they come back and make new highs, then that's 10%, almost 10% of the NASDAQ. So that's going to bring that index back to its highs. The NASDAQ has traded between 18,000 and 21,000 here with that drop. So that drop on that old top, that targets 24,000, which is nearly 20% up above. So you can see a re-rotation back into some of these tech stocks. They have the most upside potential. Obviously, the risk reward is a little bit more difficult, but I think that's going to be a very healthy sign for the market. Every time in market history that we've seen a full V recovery, it's jumped that distance of that drop on that old top. So that means we've got a lot of upside in tech still.
And I think that makes a ton of sense, particularly in the context of how you laid out your views on the trajectory of things, supported by data, of course, as well. So I guess then nothing in your mind ultimately changes from this. It kind of is more confirmation of what you already kind of were looking for. So then, if you're already involved, it's sort of sit on your hands and see things over the next few months. If you weren't, and you mentioned using kind of opportunities, if you weren't already in, is a day like today then opportunity perhaps to increase risk if you need it?
There's always opportunity. You want to be selective in your stocks, obviously, because some have had exponential runs. I'm not looking to buy Meta after it's rallied from 100 to 600. You know, it could have some profit taking at any time. Not to say that it's not a strong trend, or something like IBM, believe it or not, has got absolutely positively straight up. So you've got to be more stock selective, in this market environment. But there are stocks that have had pullbacks. And one of the themes that I look for is a stock that comes back to a breakout. It gives you a second chance. So there's a lot of stocks I think that are setting up for those opportunities. And I know this is a futures show. So Freeport-McMoRan, some of these stocks have had a bit of a pullback after an extended run, and let's see how they trade sideways and offer an opportunity. I think as far as back to the breakout theme, crude oil is a great example. It rallied through 75 and kind of broken out, and now it's come back to that. Natural gas, silver, a lot of these plays are setting up technically to give you good support levels to lean on, and that's what it's all about, is probability and having good risk reward. And if you're wrong and a level doesn't hold, it's better to be buying closer to that level than it is after it's had an extended rally.
Perhaps, too, when you look at something like Freeport and its ties to the copper market, if you do see continued strength, perhaps even China joins the party,
right,
one could naturally get there on a fundamental basis as well. Any thoughts on the interest rates? They've been under pressure, of course, at least the bond market's been under pressure. I know you're more of an equities guy, but we know it all intertwines. Any general thoughts on that?
I dabbled in trading Treasury bond futures at the Chicago Board of Trade back when I was a kid. So, yeah, I'm very interest rate sensitive. To give you the story, before they invented the VIX, people would look at the Treasury bond futures to see if people were shifting out of stocks into Treasuries, and that was the way we could gauge volatility. Things have changed, obviously, but if you look in the big picture, the 10-year note's been trading between 4.25 and 375 for months and months and months. Right now, we're at the midpoint about 4. Let's see what the next, situation is. Obviously, those people that were short on, we're counting on rates going down, did very well. They had to take some profits. That's why we've seen a little bit of a bounce. We've seen a bounce in the dollar. We've seen a little bit of a bounce in 10-year, but the trends overall have not changed until proven otherwise. We've got VIX down, dollar down, rates down. Those are all positives for stocks. We got earnings coming out, and you're going to see the billions and billions of free money that the banks have been getting just by parking their overnights and getting that rate. So, it's all profit. Companies are doing extremely, extremely well in this environment, and that's the reflection in our stock market. That's what our stock market actually is.
I was going to say the market agrees with you. But you made that point for me. So always a pleasure. Always great to get your insights, Alan. Always great to catch up as well. Chief Market Strategist at bullseyesoptions.com. Always great to get Alan's thoughts and excitement around things in the market here to kick off our Thursday. Coming